Hello, welcome to the Global View on this Wednesday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Locally, we are expecting a lower beginning. Let's though take a look at what happened overnight on global markets and on Wall Street. A couple of things that were weighing on sentiment overall: that US-Iran standoff over the Strait of Hormuz, and also traders not wanting to essentially take any risk ahead of the US inflation print that comes out this evening, our time, and obviously will determine the next move as far as the Fed is concerned, with expectations perhaps they will remain on hold given that much softer than expected jobs print that we got at the end of last week. So on Wall Street, as you can see, the major indices finishing lower, except the Russell, so the small cap index, managing some gains there, as it was mostly a risk-off session. The S&P down around 1/3%, similarly there with the Dow, Nasdaq off some 0.6%. Among the sector moves, energy the clear winner, that was up more than 1%, with oil moving higher as Iran holds firm on keeping the Strait of Hormuz shut. And tech also proved to be a drag. Amazon and SpaceX among those stocks that fell. Alphabet, that was also down heavily, as there was a leadership shake-up at Google DeepMind, with the chief executive stepping down and veteran AI scientist Jeff Dean leaving to start his own venture. As well, on top of that, this capex forecast was revised up to between $195 and $205 billion for the year. That is a 100% jump on quarter, and free cash flow is turning negative also, so investors not impressed. And elsewhere, Plug Power, which develops PC power management software, surging after better than expected second quarter earnings results. Well, the United States and Yemen's Iran-aligned Houthis reported separate attacks on shipping overnight, with Iran saying the Strait of Hormuz would remain closed unless the Trump administration accepts its conditions. Meanwhile, Pakistan's defense minister has said that the US and Iran are close to some sort of arrangement on reopening the strait. Well, as mentioned, US July CPI due out this evening our time. Economists expecting headline inflation up 0.2% for the month, with the annual rate easing to 3.4%. Core inflation forecast at 0.1% for the month, 2.5% annually. And multiple Fed members have flagged a possible rate hike next month, and this print could move markets hard in either direction. Treasuries edged up ahead of it, the market clearly hoping for good news. The US 2-year, the yield there falling to 4.22%, while the 10-year was to 4.69%. Australian 3-year government bond yield futures, they rose to 4.55%, the 10-year up to 5.03%, with markets pricing in a 20% chance the Reserve Bank cash rate will be hiked by 25 basis points at the next meeting at the end of September, with the bank, of course, having left rates on hold at 4.35% yesterday, and markets pricing in a further 55% chance that they will be hiking by December. Well, the US dollar index, a little change. The Aussie did dip following yesterday's RBA decision, but has since recovered, currently trading at 70.6 US cents. And a quick look at commodities, as I mentioned. Brent up at close to $89 a barrel, and gold little moved. It's at $4,370 an ounce. Well, earlier I caught up with Peter Cardillo from Spartan Capital to unpack the latest developments in the Middle East conflict and how that is affecting markets.
The rhetoric continues back and forth. Trump insists that he has control. The Iranians insist that they have control. And basically what we're seeing here is the oil price that's trapped in a higher, I would say, into the mid to the higher end of this range. And of course, a lot depends on the rhetoric. And, it's quite difficult to say where oil prices can go in the short term because of this particular situation. And so I think it's fair to say that we've probably seen a peak in oil prices, but that doesn't mean that we can't take a trip north of $100 again. And that's all based on the war rhetoric.
Meanwhile, gold, certainly positive moves of late. What do you see as the catalyst behind that?
Yeah, look, I think we're in a new renewed bull market. It's another leg upward. As you know, I've been predicting that the second half of this year we would see gold prices probably reach new record highs, and I'm going to stick to that prediction. I think all the ingredients are set for this market to continue to rock and roll. Nothing has really changed in terms of geopolitical problems. Nothing has really changed in terms of inflation remaining elevated. And I think the market has done has taken one major leap, and that is that it has discounted probably one or two rate hike cuts, sometimes maybe towards the end of the year or possibly at the beginning of the year, which simply means that the fear of the higher cost of money has now been absorbed, and gold prices should continue to move higher.
Yet, you mentioned inflation, Peter. Clearly, all eyes will be on that CPI read that's coming up. What are the expectations as far as you're concerned?
Well, I think we're going to see a modest gains from last month. I'm looking for a 0.1% increase in headline inflation, and in the core, probably down 0.1%. So it'll show that inflation remains sticky and elevated, but we're not seeing any real acceleration, and that's the key. And I think that puts the Feds on hold for September.
And how are you seeing the dollar tracking at the moment, Peter? And obviously there's been a focus more recently on that yen buying.
Yeah, well, we've given back, the yen has given back some of those gains. And as you know, interventions don't really work. They don't last very long. And so I kind of think defeating the speculators at this time is rather difficult. I think they would have to make more of a structural move. And the only way they could do that maybe is by raising rates aggressively. And I don't think that Japan is up for that at this moment. So I would not be a bit surprised to see all of the gains that the yen has endured evaporate over the next month or so.
And Peter, just in terms of the equity market, are you expecting that momentum to continue?
Well, in terms of stocks, look, we're just coming off of a great earnings season, and until that changes, it's going to be very difficult to call a market top. I believe we can continue to move higher. Of course, we're not going to move at a vivacious pace as we have seen in the past, but I think there's room for the indices to continue to move higher. Now, why am I basing that? Look, the reason why we had strong earnings is because we had major corporate tax cuts, and that's what's boosting the earnings gains. Not necessarily so much due to a solid, let's say, an aggressively solid economy, but the fact that corporate America is paying less taxes is adding to the bottom line.
That is Peter Cardillo from Spartan Capital. All right, let's turn our attention to where we're going to begin locally. As you can see, SPI futures off more than 0.4%. Just a bit of a pullback after those recent record gains that we've had on the local market. But clearly the focus very much on reporting season. A couple of big results to get across today, including the Commonwealth Bank, and we'll be catching up with CEO Matt Comyn later today, so look out for that interview. Similarly, also with AGL as well, after they've released their results this morning. And the top of the 10, in just a moment, I'm going to be catching up with Grant Nichols, the fund manager from Centuria Listed Funds there, talking about their latest result within Centuria Industrial REIT. Let's take it across. Stay with us for the open.